Welcome to ETF Market Insights, a weekly show focusing on the evolving world of ETF investing. Each Friday, a new panel of thought leaders aims to provide investment education and insights, with the goal of helping you become an informed investor. Make sure to visit youtube.com/ETF Market Insights to watch previous episodes. And remember to hit subscribe so you receive a notification when we post new content and when we go live each Friday. Thank you for joining us today. Let's get started.
Hello and welcome back to ETF Market Insights. I'm your host, Erin Allen with BMO ETFs. And today I have the pleasure of having a conversation with content creator or finfluencer, Brandon Beavis from the Beavis Wealth channel on YouTube. If you haven't checked out his channel before, Brandon and his father, Mark, produce great investing related content, frequent market updates, and they also run the Investing Academy, helping Canadians really learn to invest. And both Brandon and his father have spent time in the wealth management industry and bring a lot of great insights to their channel. So I'm excited to have Brandon on with me today. Brandon recently transformed most of his portfolio to ETFs. So I think it's great to have him on the channel today. That was a big change for him, and we're going to get into some of the reasons behind that move and a discussion around asset allocation ETFs as well. Before we get started, just a quick reminder that we're not providing any investment advice or recommendations. Today is all about providing information and education for do-it-yourself investors, as always. Brandon, welcome to the channel. This is new for you to be on someone else's channel, I think.
Thank you, Erin. It's very different. I feel really strange right now, but I know you'll make it nice and easy for me. But yeah, no, it was a massive decision to switch to ETF. So I'm so excited to be talking about this. And yeah, you let me know what we should talk about. I'm here, all ears.
I know it created quite the buzz on Blossom Social, which is an app that you're a founder of as well, and on your own channel. So we'll get into sort of what you were thinking around that as we go on. But I thought you could kick things off and sort of walk us through an intro into your background and experience. And really, I want to know how you ended up being a content creator.
For sure. It's funny, actually. I think this year in January, this will be my 20th year as an investor. And that's kind of wild to think about because I'm only 29 years old. I'll be turning 30 next year.
You started nice and early.
I did get started nice and early. So that's one of my big... I guess one of the big elements of my story was my dad got me started with investing when I was about 10 years old. And he got me set up with an IntrustFor account. I actually purchased a couple stocks, obviously with his help at the time. But from a very early age, my whole household was just finance, investing. His background was working professionally in the field. He was a portfolio manager, an investment advisor for 27 years. So when I got older and kind of finished my schooling and whatnot, I ended up getting my license when I was 20 and working for him. So I worked at his firm for about 4 years and started gathering this information and learning. And I'm thinking, this needs to be shared with people my age, the millennials at the time. I'm a millennial. I'm thinking none of my friends know this type of information. I was learning a lot of this information and stuff we all really need to know at the end of the day. So I started a YouTube channel back in 2016, that was kind of before.
Pioneer.
Yeah. Say again?
A pioneer.
I guess so. We were, statistically, we were the first Canadian-focused investing YouTube channel out there. So yeah, before kind of the big buzz and whatnot, but it was just me sitting in front of a camera and sharing what is a stock, what is an ETF, mutual funds versus ETFs, just the general concepts. And I guess doing it now for 6, 7, 8 years, the channel's grown and it's blossomed into a full-time career. But that's really my backstory. And I guess cool part to that is my dad ended up retiring from his business, selling his practice, and then coming to join us on the channel full time. And we're kind of like this father-son duo.
I have to know, what was the first stock that you invested in when you started 20 years ago?
I'll never forget. There's 2 of them. It was McDonald's and Coca-Cola.
Oh, McDonald's of course. And I think my kids have Disney. That's their first.
That stock would have been another very logical one, but no.
That started a little earlier. It would have been Disney, I guess.
Exactly.
And then you made the switch recently. I know you've had a lot of changes in your life. You've had kids. You have a daughter now, and I assume that had something to do with your switch to ETFs, just the sheer amount of time. But walk us through sort of what that decision looked like from your perspective.
Yeah, you nailed it there. I mean, as I got older and older, really I guess life started to hit me a bit more, and family being a big one. But yeah, we have a daughter. We actually just found out we're having our second kid now too, and that's such a priority for me and my family, is like to grow a family and focus on that. And uh, Aaron, you have kids. It's a big time. They take time and they take energy and
It's
mental energy,
priority
and then
shift. Yeah.
yeah, and it's just what you choose to prioritize. And the family life alongside with work, and work got busier and busier with the startup and the YouTube channel and everything. I found myself having less time to be really monitoring and actively managing my portfolio. Very different from when I was working in the field, and this was my 9 to 5 working with my dad. Complete difference. And that's really the driving force as to why I thought a more passive approach with ETFs would be more suitable for my phase in life. And I mean, I've said it publicly. It's like this huge weight off the shoulders, so to speak. Like going from a managed portfolio of 25 or so stocks to the very simple. I have like a 2 fund portfolio right now. It's a night and day difference, but that was definitely the driving force, just time.
Yeah, and you don't have to look at it every day anymore, which
No.
is, yeah. I
Yeah,
think
peace
that's a
of
lot of
mind.
things. Even like getting started investing, people always say they don't have the time to learn about it, and it is one of the beauties of ETFs is they really provide that diversified approach that almost hands off, passive Canadian couch potato type approach. So, and you don't have to be all in ETFs, right? Like you have some money in
No.
stocks still too, right?
No, well, actually, right now I don't. But funny enough, I think I will add a couple stocks. And you're right. Like I've always been a huge believer in like ETFs is just the way to have the core. The core, at least what works for me, is like the core of my portfolio is in these diversified products. They're getting me exposure to all the different areas I need to. But that doesn't mean I can't allocate a small portion of my portfolio to the odd stock here and there. A couple of my favorite holdings, I actually intend to do that shortly. But in general, yeah, you hit the nail on the head. It's definitely possible to do that.
And one of the ETFs that you picked was an all-in-one asset allocation
Yes.
ETFs. These things have blown up over the past probably, I guess, 5 years now since they came to market. And you bought the BMO All Equity ZEQT, 100%
QT,
equity.
correct.
What went into that decision? And what do you like about these?
Well, I love it. And it almost just doubles down on what you were just saying there, where all of the benefits of owning ETFs, this passive nature, the diversified nature, it just takes it a step further. Which again was what I was looking for, right? To be able to just take a hands-off approach, and even something as simple as having, a fund that helps you, allocate your holdings across different geographies, your asset allocation, essentially. Um, it's just one less layer of work that needs to be done on your end, the investor. So obviously I would say like you don't have to go to that extent if you don't want to be truly hands off. I know a lot of people who would select the individual funds where they want to own, and hey, like to each their own. But long story short was I thought it was an extremely reasonable product and fair fee, everything that came into it for what I was trying to get out of my investments. I love the fact that I'm not only investing here, like in Canada, America, I got exposure globally. It covers all my bases, and I think that's just really one of the major benefits of one of these all-in-one ETFs.
How do you look at it? Like I know you have another ETF in your portfolio, an S&P 500 exposure on top of ZEQT. Like, are you sort of using it as the core and then, tilting your
Good
portfolio
question.
to different strategies?
Good question. I actually consider ZEQT to be my core, right? That I think that's really the whole objective, at least the way I see it, is that you have you have all your bases covered, really, in terms of your asset allocation. The reason why I have a couple different holdings is just depending on the account type. So whether it's my RSP or TFSA, I do have slightly different holdings there,
Mhm.
based on the currency that I had in those accounts. But no, the fund that I'm adding to, I actually add money to my account on a weekly basis right now. I've got all my automation set up, and that's how I'm dollar cost averaging my way to retirement is the goal. And
Yeah.
ZEQT is the one that I'm personally funneling my money into, because I want that to be representing a larger and larger and larger part of my portfolio. One thing I do keep in mind is, if I do own an S&P 500 fund, there is overlap, and that's okay with me. There's not I think as long as you're aware of that, which maybe some investors aren't, I see no real issue with that. But
Yeah,
ZEQT,
for sure.
it does just check all the boxes. So that's the fund that I'm actively building up currently and for the foreseeable future.
And you talked about like the relatively low fees, 18 basis point management fee or
Yeah,
20 basis point
MER,
all in
yeah.
NER. But there is a criticism out there that I sometimes hear from time to time about like, why wouldn't you just go out and buy the individual pieces of that asset allocation ETF? Your fee would be lower.
Yeah,
What do you say to that?
you could. I mean, I think it is a fair criticism, but at the same time, like my approach on not just investing but life is you're paying for a service in many respects. Like you're getting value from having that fund allocated in such a way. So if you want to take it a step further and go buy it yourself, you absolutely could. But again, for me personally, I can only speak on what the decision I made. I wanted that complete hands-off approach. I wanted the most passive nature possible, where I don't, like you said, have to. I do still look at my investments because it's, I like seeing checking in on them every once in a while, but I truly don't have to. It's taking that to the full extreme, and with a 20 basis point MER, like that is a fee, in my opinion, well worth paying. It's well worth the value. It's so marginal at the end of the day, especially when you think of people that are investing in mutual funds and paying significantly higher fees than other products. This is still a very low cost product at the end of the day. Sure, go for it and build it yourself with individual ETFs, or just have a package solution for you. I think there's not really
Yeah.
a right or wrong. It's just what you're aiming for.
Or how much time you have, I guess, too, right?
Yeah,
Because if
it just
you
keeps
have
boiling
the
down to
time
that.
to be rebalanced, the rebalancing to me is a big value add of these things because I don't like to look at my portfolio every day or every week or every month. And so I don't want to open it up one day and be, 60% in the US or 80% in the US, right? Like I think that is a huge benefit that goes unnoticed a lot of times. And
No, you're so
yeah.
right. You're so right. And it's again, different people will put different value on that. But I think for the passive investor, that's not one to be overlooked.
Every single ETF provider seems to have one of these now, or a full
Yeah.
suite of them, right? Like the conservative balanced growth, all equity, and then we even have some ESG solutions or some income focused solutions. Everybody's got these because they are so popular. But how do you go about doing your due diligence on it, and what kind of drives your decision on which one to pick?
Hmm. Um, I have this like belief, and it's maybe not the best belief, but I almost like to say, like, at the end of the day, when you break down what these funds own, they're all also similar. Like there are slight differences. One thing in particular that I really liked about ZEQT, Aaron, was actually in comparison to its like relative or its peers, like a slightly higher US weighting. I also like the fact that it also had some small cap exposure, minimal, but small cap is just a little more diversified. So you could get into the nitty
Mhm.
gritty of the actual, breakdown. But my over like arching belief is like 20 years from now, it's not really going to make much of a difference. It's kind of like asking that question, like, do you prefer Coke or do you prefer Pepsi? Like they're both colas. They both taste like relatively the same. But it's more so about choosing, like, in my opinion, choosing the provider that you want to support and that you like. I mean, of course, there are, I'm sure, ETF providers out there that are not ones you would want to, deal with or own, like, out there. But when we're talking about like the cream of the crop, the biggest ones here in Canada, I think they're all very fair considerations. So again, for me personally, Aaron, it wasn't like oh, this one has, a slightly higher MER. Like ZQT did have a slightly lower MER compared to, for example, like VQT. But that wasn't like a consideration for me, nor was it really the holdings. It was just, at the end of the day, I personally have been a fan of BMO like since I've started investing. I think the
Yeah.
fact that we're Canadian is one of those big things that it's just whether it's a trust factor or whether it's a loyalty thing, supporting Canadians. That's something that just like hit a nerve with me. So at the end of the day, that's my take on it.
Yeah.
And I'm very
Different things are going to be important to different people, I guess. But yeah, whether
exactly
it's the fee, the slight change in fee, or the slight change in
the holdings
holdings.
breakdown.
Yeah.
Yeah, exactly.
Uh,
So I think that's the fun part, is when you start to be able to do your own research and dive into the hood of these different funds, you can start to identify which one is the right fit for you. But for me, it was, which provider do I support and which provider do I like the best, to be honest.
Love it. Love to hear it.
Love you guys. Yeah.
When it comes to which portfolio to pick, conservative balanced growth, all equity, talk to us a bit about like what should be going into that decision if you're a new investor looking at these products.
Yeah. I went for the all equity, and I'm sitting here at 29 years old, turning 30. I think the biggest, well, I wouldn't say there's the biggest factor, Aaron, is like, I think it's more so like identifying first what your priority is out of investing, and everyone's priority is different, right? Like for some people it's retirement, for some people it's a more midterm goal, some people it's a shorter term goal. That in and of itself, I think, would really determine it would start honing you into possibly the right allocation.
Mhm.
I think your risk tolerance is a big thing as well. Like keep in mind, again, I've been investing for quite some time, that I'm personally not affected by the volatility of the market, like the ups and downs of the market. Say the market were to crash next year, that doesn't bother me because I do have an understanding of the longer term trends of the market and how they tend to recover.
Yeah.
But for a beginner investor, that would also be another factor to consider heavily, is like, even just emotionally, are you willing to partake in the full swings of the equity market, or do you want to have some more conservative pieces in there? Again, back to that priority piece, age obviously is just one that I think is a kind of a given. If you're closer and closer to retirement, or maybe you don't have as much luxury of time as a younger person, you may want to skew to more of a balanced approach.
Yeah.
But in general, I'm such a fan of all of the different options. It's just like identifying which is the best one for your stage in life.
Yeah, and the good news is that they're coming up, and some of them have, longer track records now, so you can have a look at how that volatility might look historically, and if you can
Right.
stomach it and that type of thing. And I think they're also great for just transitioning in your life, right? Like
That's so
as you
true.
approach retirement, maybe you're going to be coming down to the growth or the balanced, and
That's so true. Well, that's it.
yeah.
I should have mentioned that. So like I started with, I'm 29, so I'm in the all equity camp. That's the one that I
Mhm.
opted for. And absolutely, as I get older and enter different phases of my life and get closer and closer to retirement, again, that's many years out. But that would certainly warrant a change in the portfolio, a change in the allocation where, maybe skewing a bit more to fixed income or more of a balanced approach would be a much more suitable option at that stage in life.
Well, I love that you've come to the dark side and are now buying ETFs, Brandon. It's very exciting
Me
for us
too.
at BMO.
Me too. I'm loving it too, Erin.
Um, I did want to touch on, before we let you go, your app. You are a co-founder of the Blossom social app, which I think is fantastic. And you guys have grown it to, is it over 200,000 users yet?
Very
Pretty close.
close. Very close. We're gonna hit
So
it here by year end, so we're just creeping up on 200,000.
talk to us about this app and what it really does.
Thank you. Well, no, it's I appreciate you, yeah, mentioning it here. And we're basically building a social media at the end of the day, but it's catered and geared towards long-term investors. So we've seen social medias out there like Wall Street Bets and Twitter to some extent, and Reddit, where there's a lot of activity, but it tends to be a lot more short term and trading and kind of what's exciting and all buzzy. And it's
Yeah.
just our fundamental belief that those probably aren't the best places for a beginner, or just in general, like the masses who are getting into investing. That's probably not the type of investing activity that you want to partake in or want to learn from. And that's kind of what we saw out there. So we thought, can we build a platform that nurtures, like, funny enough, I think you know this, Erin, the most popular topic on Blossom is ETFs. ETFs, index funds, dividends, like those are our top three topics, followed by, again, 200,000 users. And it's like very, you don't get that a lot in the online
Reddit
world.
is the world. Yeah.
No, yeah, it's not sexy. It's really not sexy at all. So we're super proud of it, but basically it's a platform where people can come, connect, learn, share what they're investing in. Transparency is a huge pillar for us, but
Mhm.
yeah, we're really proud of the growth, and we have big ambitions to continue growing here in the new year.
One thing I like about it is how you can link up your brokerage account, and it kind of gives justice to what people are talking about in the threads, because you can see, are
Exactly.
they actually doing what they're talking about? And I think that adds a lot of value. And then we've partnered with Blossom on a learn and earn platform, where if you complete some of the courses online, you actually get money in your account as well. So I think it's fostering the right behaviors overall, and there's a great transparency to it, and it's an amazing community. There was a bunch of social events over the summer that I got to participate in. It was very cool. So I love what you're doing. Keep up. So check out the Blossom app and check out Beavis Wealth on YouTube. Thanks a lot, Brandon, for being here today. I enjoyed our chat.
Thank you, Erin. You're the best. Appreciate you having me on.
All right, next week we're back, and I'll be joined by our ETF strategist, Vipin Rai. He'll be taking a look at Trump 2016 versus Trump 2025. What are the similarities? What are the differences? And what we might consider when it comes to our investment portfolios. So that's all for today. We'll see you next week. Bye for now.
Thank you for watching this week's episode of ETF Market Insights. To stream any previous episode of ETF Market Insights series, please visit youtube.com/ETF Market Insights. Remember to hit subscribe and sign up for alerts so you know when we post new content. Also, we invite you to visit our accompanying website for ETF tools, education, and much more at etfmarketinsights.com. Once again, thank you for watching. The session provided is for information purposes only. Any reference to a particular company or product is for illustrative purposes only and should not be considered as investment advice or recommendation to buy or sell. Particular investments and/or trading strategies should be evaluated relative to the individual's investment objectives, and professional advice should be obtained with respect to any circumstance.